Alright, so today I'm going to continue on the tape reading chart, but instead of just jumping through all the studies, we can actually apply them on real market today, where the trades are, etc., etc. Alright, so left hand side is the Renko chart. It's just a support resistance chart. That's all it is. That's what I'm using it for. It's excellent and it gives me clear understanding of rally, pullback, and all of that with volume. So you can use a higher time frame, 3-hour chart or 4-hour chart, whatever you want. In the middle you have the wave chart. It's also important, and this is required for Wyckoff day trading. And on the right hand side you also have the this chart here, which is also, in my opinion, like the missing link for day traders. This is a tape reading chart. This is what Wyckoff had devised, and I'm just building on exactly what he's talking about in his tape reading thing. All right, so I went over what happens at support here, and I'm going to also cover the spring here to show you that how these things occur at support. So you have this demand zone, or wherever the pivot, and we're just going to compare both of them, because as I explained yesterday, same thing happens. All right, for these markets extremely thick, which means that when they break out, before that there's a significant amount of accumulation that needs to be done in order to break the highs. Typically thick markets have that, where you have a base, a bigger base. Thin markets, they don't really, you don't see the big base clearly, but thick markets have that attribute. Thin markets, you might have a little base and then it'll just go, but the thicker the market, typically you see the base development. Anyway, so first we'll take a look at the first accumulation, and then we'll take a look at the second accumulation. So let's take a look at the first accumulation. And I'm going to take out the prints, so you see it's nothing more than a base, a fake breakout, and a reversal up. Again, a base, you can see the lines of support here, 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 here. A fake break, reversal. When it reverses, over, what is this, about almost 130,000 contract reversal up. So liquidity, all that, whatever you want to call it, spring, it was all grabbed right there. And then it goes up, right? So you see the base, you see the spring, you see the break above this high. It has to break the high, otherwise Wyckoff would not enter. He's looking for a base. He's looking for, he's also looking for the inability to go down, meaning that he wants to see the volume dry up, right? And he's also looking for, what else? The accumulation prints, changes of behavior, climaxes, the volume at price climaxes, the volume at price accumulation, change of behavior. So where is that? I mean, it's right here. It's highlighted here, the 27 and the 26. And then, of course, this one is the dead giveaway. 112,000 right there. Bang. And so these are the big prints. Now that could be sometimes the beginning of the day, end of the day, whatever. These don't mean anything until that break is taken out. And it was taken out, right? After the spring. Then it did all its whatever. Alright, so now we're going to look at the second base. So here we're back at the level, right? We're back at the level. Now we know that ES there has a base building, a lot of base building, and then typically a spring and a reversal. Same thing that I just covered happened again today, where you have the base being built, right, between here and here, the high and the low based, right? The big print right there. That told me there's going to be a move. I don't know exactly how it's going to be. I know that there's a tendency to fake break and all that, but I know that there's going to be a move. Okay, fine, maybe it's beginning or end of the day, whatever, but it is going to happen again. It's just going to happen here and here. So here, 123,000 contracts in that little area. So even though it's at a certain time of the day, they keep building the volume there. Then you have the fake break, which is the spring, and then reversal. That reversal is very, very meaningful because that's what you want. After the spring, after the fake break, it should have no follow through, meaning no lower low, and instead strong reversal. There it is. After that, it does all this shaking and dancing, and then finally, after it's done base building some more here, because what you have is a base on, I don't want to call it base on base, but I mean, you get the idea that there's actually one base, then creates another range of continuous accumulation, and then breaks out. So where are you going to have a, well, the first is, where's the evidences? Right here, right? And right there. So because these are volumes that are taking out the highs. Those highs are being taken out. So those breaks, or this is more like absorption. And this one here, boom, break. Then it offers is a very heavy volume, and it offers the pullback and a final rally throughout, end of day. So this is what I wanted to point out. You see that it's not exactly the same, but it's the principle is exactly the same. Again, you got a long base, spring, higher high, breakout, and now the shit in the middle will be the all the accumulation, the climaxing, and all that, all the effort. Right here you have the base, but there's a spring, takes it up, retest, bing bing bing. Remember, you want the highs to be taken. This is a high, this is a lower high, it needs to be taken, and finally it was taken, so now it's game on. Alright, so that is what you need to see. Now, how do you know about fake breaks and why don't I take the short and all of that? The answer is very simple. You need to filter that information out. If you try to read everything, you are going to screw up, because the whole purpose of this is to get you short. Right here is to get you short. The whole purpose of all of this is to get you short or to take out stops. Basically, it's a shakeout, right? The spring and shakeout is the same thing, but the shakeouts are typically bigger, right? So shakeout, spring is a type of shakeout, right? The whole purpose of even this move down is to give you a bearish picture. All right, you just have to wait until the highs are taken. And how do you know to filter out the information that's giving you a short bias and to kind of focus on the long bias? Is one reason only. That is the higher time frame trend and level. So you know what information to weigh in your mind and judge. Because the higher time frame or whichever chart you're using is up and you're at a support level, you want to look only for longs. If you just look at this chart, big problem. Why? You might see the base and a break and say, oh yeah, this redistribution, let me short it. Oh yeah, against this 123,000, let me start shorting, right? But so you have to actually have a bias when you have a trend and it's at the support level, you have to have a bias, meaning you have to filter out information. I know, trying to be objective is not going to work. It leads to confusion. You have to be able to filter out the shorts on long support levels, because the short signals or whatever is going to be the springs and the shakeouts. All right, so that's how I know. Okay, all right, I know you even know what to expect. Okay, they're gonna do this and come back within the range, hold it, and then break. Okay, if you try to be objective and go long short, and try to quote unquote read every behavior without filtering it out, there will be high probability of error. All right. So if you didn't get here, in here, where would Wyckoff go long? Right here on this arrow, not this one, this one. When it takes out the high, he would go long. Put a stop below the low, or 1 or 2 boxes below the low. He would take this high. As soon as it makes that higher high, boom, he's in. That's not my opinion. That breakout is actually right from his studies. That's what he does. All right. So, one second. Anyway, so there you go, boom. And then if you don't get in right here where he would get in, that's fine. You want to play pullbacks, it goes rallies. Where is it going to pull back to? Somewhere here. I have indications telling me where to look for pullbacks and stops and all that, just because I'm lazy. All right, so and then if you don't get in there, you have another breakout. So just hit the pullback, and then you finally get another rally. So you have 1 rally, pull back, 2 rally, pull back, and go. So that's it. Now, from a Wyckoff perspective, when the market is going down, right, and you want to go long, what do you look for? Base. He called it some hesitation to go down. You look for big prints. Do you see anything in this base that's climactic? I mean, this 38,000 is, but on an uptick, I don't really see. I see 27,000, 27,000. Here's the key one, 123,000, but it breaks down, giving the false picture. So if you know that, you're going to get a spring in advance, especially on the ES, then, you don't screw up. The other thing to mention is that the level and trend and all that, so not to take just any bullshit trade. All right, now it comes back in. Okay, what else to mention was, what else did he look for? He looks for the low volume dips. I don't see that many. I mean, you had the 0 and a 4 here, 4, 4, 3, right? 4, 4, 3 here. There are some dips here that are low volume, like the 4, and the 3. So that's really important that he looked for that. The low volume dip, and then finally the ability to hold a higher low. So for example, when this low was taken, that low held, and then you had the breakout, which is what he's really looking for, because it is his confirmation to go long. Out of all of this, when do you become super bullish? When it goes the two after the spring reversal right here and here, and this 42. That's 42,000 against resistance, and it breaks. So I mean, it's going up, no doubt about it. All right, other than that, you just wait for a breakout, pullback, breakout, pullback, breakout, until the breakouts fail, and there you go. All right, where was I? Okay. Take a look at other markets now. One other thing to mention: you don't just buy any breakout, pullback. It is because signals don't work. Let me just be very blunt. Signals don't work. If you just try to trade signals when the market ranges, you're going to lose everything. The only reason these signals are working is because it's in markup. Meaning on the high time frame, you had a rally and a pullback at a demand level, made the base to hit the breakout, went from accumulation into markup. That's why breakouts and pullbacks in markup work, in ranges don't, in downtrends don't, in markdown don't. It is because it is in markup that you can say, okay, time to go long. All right, as long as you have to be in markup, breakouts in any other condition, they will not work. They will not work, or they have very little juice, very little reward. All right, and that said, let's take a look at crude and gold. All right, so again, what are we looking for when the market goes down, down, down? We look for hesitation, base building, and all of that, right? All right, so market puked right here. Down, puke, 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 puke. Right there. Right there. I mean, you're going to get a reversal. Now it's going to, see how much, look, they're starting to build, let's go back down, but anyway. So let's examine this reversal. What is the first thing you see? Base. What is the high of the base? Here. Now, you want to see any climaxes? No. Any uptick on heavy buying? Well, there is like 30 and 20, so it's about 50,000 up here, but I don't really see anything until here. All right, so this is where it's the dead giveaway. All right, so in crude, you see all of a sudden they go crazy. 4,600, 4,700, 3,000. All this buying. This is the column within the base that is telling you we are going up. All this violent buying. All right, so it does all that, then it pulls back, and it just goes. All right. Now, where in here, as it's going up, do you think that there's a problem? Right at the high, you have the highest uptick. The highest uptick is right there, folks. That right there is tremendous amount. It's not tremendous, but 4,100, 4,100, and what happens? A reversal happens. That's your climax. That's why. That right there is your climax. You cannot have, the white box is I have something that identifies high volume. You should not have high volume and then a breakdown. That right there becomes resistance. The level below it right here is your POC. The whole level is distribution. So it should go down. All right. What else do you see? As the market is going up, it is tagging this area right here. Over here you have 5,600 and 4,100, right? At first they broke the 3,900 and then got stuck right here. 41 and 5,600 goes up, completes the test of the breakdown, this big breakdown, completes it, and pukes. There is one other thing with bases, even on short-term charts. Should be right there. You can do this. So this is about 9, but remember these are thin markets, so base is not really worthwhile. Right? It's not really worthwhile because thin markets, you have small bases, You know, it only projects, it's small, so it'll project like maybe up to this high. So it's not that good for base, for thin markets. The key here is this buying white, buying in the base is accumulation, buying, and then the what? The breakout. Where? Right here, above this high. Once it breaks out, you get the what, you know what, in. Because the base has accumulation and breaking out to the upside, the trend is up. Now, you may say the same thing about this, but I don't see that much of base. It's different, right? You have this big red bar. So I'm not too sure about this. There is enough selling here. End of day selling where it might test and go down again. Not really sure. But this is like very clear. You have that red bar and that big green bar. That high is the critical high. Now it needs to pull back and test. It needs to hold. Yes, it can do a spring, but typically you want it to hold, build the base, nice line of support, and then break. So this is how crude reversed. I even gave a change of behavior over here. Anyway, let's go. Let's go and where was I? Yeah, that 41 right there is the minor climax, by the way. If I haven't said that already. Now let's go to the gold market. Again, what have you learned from the Wyckoff study? The first study I did. Market goes down, 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 builds a base. Then what happens? What are the things that you look for? You look for climaxes, change of behaviors, low volume tests, and the confirmation higher high. Okay, so as it goes down, where do you have the climax? You do, right there. That 34 is your climax. Do you have a change of behavior? On an uptick, it's right here. That's the climax, that's the uptick, right? All right, climax, uptick. The third thing is your low volume tests. Do you have low volume tests? You do. It's right here. So a lot of times you might not have everything, but you know, what are you gonna do? All right, so those are the key behaviors within the range are climaxes, changes of behavior. You might just have high volume prints that you don't know what they are, but they're there. Right? I know this is a climax because in the range, it's at the extreme low, and then it reverses. That's a climax. Then an uptick, right? It's the biggest uptick volume since the high. In fact, there is no other uptick. But this was very high climactic action right here. See that? 5,100. Then here, 5,200. So, and you have 52 also here, but anyway, 52 on an uptick. Now, put what you want to do when you're in a range and it's base building, immediately mark the high. Like, immediately mark the high. Why do you do it? Wyckoff would buy on the break of the high. He actually bought breakouts. Just saying. I know everyone's thinking it's springs and upthrusts, but that is true. Because of his understudies, they did that. But Wyckoff looked for confirmation. And although he didn't recommend in the swing trading to buy the higher high because it has the worst risk, that was one type of entry. Within the tape reading chart that which is intraday, he actually, in that study, he bought the confirmation higher high breakout. Anyway, so you have the climax, you have the change of behavior, you have a base. What do you need? The higher high, which is right. Bingo. Right there. There's one more thing. What is it? The low volume test. You actually have that. This makes the probability so, I can't even tell you how high the probability is. there, because once you have all this low volume testing and higher and whatever, and if you notice, you actually have a spring too. That's a spring. It dipped below, right? It dipped below the base right here, found almost zero, and then reversed, went right back into the range. So it actually has that. Anyway, these are the key behaviors when you're analyzing a range or accumulation base or distribution base, what you look for. Then it breaks the higher high and you're very, very confident because you have a climax, because you have a change of behavior, because you have the low volume testing on the right hand side, which really what it means is all the float, all those contracts have been bought. No more. No more sellers, no more buyers. Therefore, you got to go higher. So that LVT here, and when you have signals, which ones do you use? You have to still be able to filter because, and I know what to filter. Why? Because it's on a higher time frame support level. Simple as that. High time frame support level, look for longs. That's all you got to know. You got to just look for longs. Which signal's working? Longs. Just filter out the shorts until you have clarity in the longs, because you do not want your mind judging short information telling you to short, information telling you to long. Information telling you to short later on, then again information telling you to long. Then information short, you're going to go, what you want to do is focus on the long. Why? Trend is up, or because it's at a critical support level, or because of both those reasons. Anyway, so there's your change of behavior, right? First you have the climax, you got your uptick, you have your spring, and what you got? The higher high. High of the range has been taken. You're on a long signal, got to buy pullbacks. And look what happened. Boom. So now we are actually at a resistance level right here. All right, we are at a resistance level. Now, one of two things can occur. One, it absorbs and goes higher. Two, it's going to reverse and go lower. Right? So we look here, we look here, we look here. You have your low volume testing. That's one indication. But before we do that, do you have any potential climactic action? To some degree, you could consider this. I do consider the range, but I would have preferred it if it was a little bit higher. I would have much more confidence, because then I'd be like, okay, climax, secondary low volume test at the same level. What? Bingo. This is a little bit confusing because I needed it like at least one brick higher, but at least it broke this price low, right? It broke that low. So anyway, so we're looking at base building. Do we have a base? And this is a current market, folks. I'm not making shit up here. All right, this is not okay. Let me cherry pick 6 months ago. This is right now. So possible climax right here. Right? Do we have an upthrust? If this is it, this is a possible upthrust. Do we have a range low? I don't like this little bar. What to do? If you have a big bar up and a big bar down, at least it can establish range. This is a little shit bar. I don't know. So this is the low volume testing. Very good. What are there any elements that are missing? Well, and which ones are unclear? The climax is unclear. The change of behavior. So these are 25 and 24. Do we have anything over like 40 and higher? Ah, shit. There's nothing that higher on a downtick here. This is 33, 34. Yeah, I don't know. So the only thing I see that is somewhat helpful is the low volume testing up here and the base and the break. All right. The problem is that it didn't have this, the white box up here showing high volume change of behavior, and that is not good. So it might go down all the way down here, or it might just hold. These guys right here might just hold it. There's a line of support here. There's a line of support here that was already supporting it. You see this 30? Look what happened. It bounced off of that, and you have this big print, this 50 print. I don't know. It's a little bit lower. Anyway, so let's. I'm just gonna write what you should look for in a base. All right. Okay. So let's sum it all up. First, you need to have your trend plus higher time frame support or resistance level. So in an uptrend, you're looking for a pullback to a support level. In a downtrend, it could be a resistance level. What are those levels? They're either the supply and demand zones, or they're the break of the Ison Creek, the breakout and the test of the breakout. Or it can be a spring of the first test of the breakout, or upthrust of the first test of the breakdown. Okay, do not just halfway back and all that. No, wherever you're looking, the pullback needs to be to a level of high volume. High volume is found in two places religiously: the breakouts and breakdowns, as well as the demand and supply zones, because they turn the pivot. And that's why. So demand overtakes supply, you create a pivot, and that's what you're looking for. The supply and demand zones and the other, basically high volume areas, they create the support and resistance level. That also means the third actually is the NEPOC of a higher time frame. All right, now, so we did this. So you have to know your levels and you have to know the trend. You're not getting anywhere. That's just the start. Second, when it comes to that level, what do you look for? A base to form. Why do we need a base to form? Because the base is not just a base, man. That's a distribution or accumulation. And it forms a line of selling there, or a line of buying at support. So you need that base, that volume, that all of that is evidence. Right? You need that base. Like, in the white cause say you have to have a cause. It really is true. All right. When you have a turn, this is what happens. And if you think from a momentum perspective, right? If the market is going up, does this just turn and go down, down, down? No, it goes up and it loses momentum and it becomes like a rounding top. And this space is like that rounding top. And then it turns and goes down. It's like an N, like a lowercase n, or a U. Like a U or a N. Rounding top is the base of distribution. The U is that base of accumulation. This is that U rounding top. Anyway, so after the base forms, what are you looking for in the base? In the base, you're looking for your change of behavior, which is a high volume print. Let's focus on the left-hand side first. So your climax will indicate your left-hand side, right? Climax is your high volume near the highs for distribution and near the lows for accumulation bases. Again, near the highs for distribution bases and near the lows for accumulation bases. Change of behavior low volume test. All right. Okay. What should you do? Immediately, so those are what you're looking for, the volume-based behaviors in the base. Volume-based behaviors in the base. Okay, then immediately mark the high of an accumulation base or the low of a distribution base. So you mark the high or the low. Why? Because you're looking for confirmation, which comes in the form of a higher high or a lower low. So for the accumulation bases, you need higher high, and for distribution bases, you need lower low. All right. What else? In the base, you should, oh God, I forgot one of the most important things. I believe they should. All right, you should have spring and up thrusts, followed by a reversal. So this is the up thrust and goes right back and breaks. See that? Up thrust, goes back and breaks. Bingo. See, is there anything else? Well, after the spring, obviously you're going to have high lows, and after the up thrust, you have lower highs. That's how you detect this is an up thrust, because after that you have lower highs. Before it, you have lower highs. Lower high before, lower high after. This must be the up thrust that failed to go higher and went back, and then breaks from the other side. Okay, so you have here, I don't want to call it a checklist, but behaviors that are critical for base building or accumulation and distribution using the tape reading chart. Right? Like even this right here, it's not going to just go up. This is pretty screwed up because it has all of this. They would have to absorb or break with heavy volume either during a session open, right? Like in the morning or towards the end. It's not easy to break these bases. Why? Because once you build all this volume and you go down, it's not easy to break. You go back above it. Why? Because of many reasons, one of which is you've already generated a lot of volume and that someone's taken the other side of that, and you have to allow them to cover, which means you have to absorb all of that. You have to absorb this whole thing. And how much is that? Above this level, you have 353 plus whatever here. I don't know what this is. Now this is interesting because this level here has a lot more volume. It actually, I'm not sure what is it, 50, 60, 70, 81, 91, 101, 102, 103, I don't know, something like that. So there's a lot of volume building over here. You can see the 50 print. Anyway, just look at the profile. And by the way, profile, I'm convinced, is a Wyckoff concept, the volume profile. As I explained in the study, he basically profiled the volume. He said above this price, like 6,700 shares above this price or below this price. So that's actually profiling volume at price. So I don't know if there's any earlier indication of anyone profiling volume at price like that, but it's very clear that he came up with this volume at price, or at least in his Division 2 course. All right, I'm done. Here you go to use this. For more information, go read Wyckoff Division 2. All right, bye.